is actually one of them. So I think what you're doing is great. Thanks for having me.
Thank you. Thank you. Thank you. So let's get right into it then. What is life insurance?
Life insurance. Well, there's a couple different, ways. There's the typical definition, which is like a contract between a person and an insurance carrier, basically saying that in the event that something happens to you, your family is going to get or receive a death benefit, right? A lump sum or of money. So it's just pretty much you protecting yourself in the event that something happens, but also being able to leave a legacy for your family as well.
Okay. Okay. So one of the biggest questions, as I talked about life insurance was, what are the different types of life insurances? Can you go over and break those down for us?
Sure. So I think also when it comes to life insurance, we typically only think about one type. Most people are only really exposed to one type, and this is why it's so important to make sure that people are getting educated rather than pitched. So when it comes to life insurance, there's really three main categories. There's term, which is probably the most common. There's another one called ROP term, which is it's a type of term policy, except you get a return, right? There's a return of your premium. That's what ROP stands for. And then the last one is permanent life insurance. And then within permanent, you've got all these different types underneath. So it's kind of like an umbrella term, permanent insurance. But I'll sum up each one. Term is very simple. The good thing about it is it's inexpensive, which is probably why it's the most common. The downside to it is, it expires, right? So after maybe anywhere from 10 to 30 years, this policy will lapse, which means the cost that you've been guaranteed for the past 30 years will increase. And so that's what they mean by expire. It doesn't mean that your coverage is done, but it means that 31st year, the cost is going to jump significantly. And I've seen this with quite a few policies. And if you're not familiar or have not looked into your policy, some people may not know when that day is. So that's a term policy. I've seen people get it if they want to, cover like a mortgage if they pass away, debt. A lot of people don't know debt can be inherited by their spouse. So debt, and then sometimes children, making sure your children can go to college. So that's term. With ROP, it's a little bit more expensive than term. But I've seen people, use this policy just because they're kind of like, if I invest into this life insurance, and this comes from maybe a lack of fully understanding how insurance works, but some people are still a little bit, on the fence about it. So the way this policy works is when you get the insurance, again, it's a term, so it may last 10 to 30 years, anywhere between that time, you get your money back at the end. So every dollar that you've put into that policy, assuming you've never used it, you would get it back. Now, the challenge here is I know a lot of people who get excited when they hear this. And they're like, well, great, I'm putting money in. If I don't use the policy, I get everything back. But if you're going to put money down for 30 years, wouldn't you want the value of it to increase rather than decrease? Most people would say yes. So if I put down a total of $30,000 over the course of, let's say, 30 years, right? When I get that money back, I got to ask myself, is the value of that money going to be the same? No, 30 years ago, you could probably do a lot with maybe $30,000. Today, you're not even going to make it in California with that, to be completely honest. So $30,000, 30 years from now, who knows what that's, going to be, especially with the value of the dollars going down. A lot of people don't know that, I want to say about 40% of all of the money ever printed in the United States was printed in the year 2020. 40% of from the time we began as a country to today, or at the time of 2020, I would say 40% of all the money ever printed was printed in 2020. And that was because of the stimulus checks and them trying to jumpstart the economy all over again. So paying attention to inflation, cost of living, those are things you got to consider with ROP. And then with permanent policies are your whole lives, your IULs, there's GULs, there's all these different types, but permanent policies just mean that they will last what is considered a lifetime. And so that can be, there's some that's like 95, 99, 105. But essentially what happens is you get this policy early on in life or whenever you get it, and you lock in that rate. So whatever the cost is at that time of purchase is the cost it will be for till the end of your life, basically. So permanent policies are a little bit better for people who are looking for more of like a long-term policy, basically.